Good morning, everyone. This is Brian Beamish, a CR investor, Canadian rational investor, coming to you today, June 11th, Wednesday, 2014. Talking to you today about these are our little 5-10 minute videos, daily summary videos on what's happening in Bitcoin land, technically speaking. And as we sort of grind on sideways here, I thought a few things that jumped out at me that were kind of interesting, so I thought I'd bring them to your attention, and we'll take the ball from there. So first and foremost, regular viewers of this commentary will see this chart and will probably recognize it immediately. Let's start off. I like to follow the Finex. This is BTC USD Finex. This is the 4-hour chart, so it gives us a nice big view of the market to analyze. So let's start off with the big picture today, and I'm going to try and make this 5 minutes. We'll see how we do. But anyway, the year-to-date picture, basically we were up at 995 at the beginning of January, and we worked our way down to 340 here through the spring. And so just a nice simple 50% retracement. Good old William Gann, that would be 667.50. And you can see after a nice sideways consolidation, you can call this a narrow sideways channel. If we blow this up, you could see that this was an inverted head and shoulders. Long and short of it here, the sellers, and you can see the volume just disappeared here. The sellers, they just ran out of steam. And market is always searching for volume, so if it can't find more sellers on the way down, then it's going to turn around. It's going to start finding sellers on the way up. So that's basically what we've done. We've rallied back up, and we're right now testing this key high here, a 719.25 that was put in back in March. So, in my commentaries I've posted lately, I've basically said, look, we had a nice little slam dunk long here. This was really, really simple trade, real thin. In fact, in my commentary box, I even just wrote here, textbook market structure change. We had a nice simple 50% rule target in mind, and indeed that's been hit. And this equated to about a 45% capital gain on the trade. So, as I said, slam dunk sort of done for now. Where we're going for now, this is, of course, the $64,000 question everybody has on their minds. My basic premise, I'm a big fan of a gentleman by the name of Huddleston. He runs the Inner Circle Trader on Google. Lots of links and references I've made in my other videos. Anyway, he is a hedge fund manager, and he was the one who introduced me to this concept of the optimal trade entry, and that's just a simple notion. And I'll just keep saying this day after day. Institutions do not sell on the way down. Maybe an institution's thinking that Bitcoin's going off the board, but they're not going to short down here. Where are institutions likely to short a market that's heading down? And the answer is the optimal trade entry zone. And basically, that's the 61.8 to 78.6 fibs. And that's what this red box is here. So, I've been counseling for a while now that while the market structure on the higher time frames, sort of weekly, is still sort of wishy-washy. Yes, we've had a nice 4-hour turn. We have a nice double bottom. Maybe we've got the makings for a bottom. There are still lots of institutions out there that might take the shot at putting on short positions. And if you're going to short, where would you likely to short? And the answer is somewhere between about 750 and 850. So here we are at 650-ish. And really what I'm telling people now is, this is really just a flip of the coin. Yes, we could move up into the OTE zone, or, if this rally does exhaust itself, these are some pretty realistic fib targets on the way down. And I've been counseling people that, basically for the past week, we've, done nothing more than just sort of consolidated in this coil or wedge. And while we may get another move higher, like I said, real institutions are probably looking for another $100 or so rally higher before they'll start shorting in earnest. there is a very realistic possibility that this 50% level is the top, and we're going to have to start cleaning up. So if we, the scenarios at this point are we break higher, head up into that OTE zone. I would consider that a relatively high risk trade. Myself, I wouldn't do that long trade. I think I would prefer to wait. And if we did get some more consolidation and some bottoming action at important fib levels, then that's when I would consider buying again. Full disclosure, I'm long about, I would say, a little over a third of the about a third of my original position. On my long off of the 460 lows, and I've just been slowly spoon feeding the market coin as we move up here. And if we get one more move higher up into the OTE, then I'll probably let the whole thing go. But for the time being, I'm just sort of sitting pat and just waiting. What's going to get me to act? As I said, I doubt I would buy more here just because this is relatively high risk. This is, fib-wise, a relatively shallow consolidation. But having said that, I also talk about the fact that, the market's going to do whatever the market wants to do. And this green box here has highlighted the fact that price itself has put in a double bottom. And in yesterday's commentary, I said that if your trading plan was to trade double bottoms, then you would be remiss not to take the trade because you'd be breaking the plan. And that's really the most important thing about trading, is following your plan. So this breakout level here was 664.50. Is that correct? Yeah, it looks like 664.50. And actually yesterday, first thing in the morning, my commentary was right on this bar here. And I had conjectured, well, maybe we have a double bottom working. If that's the case, then you're long there from that 664.50, and your stop is just below this low, 637.10. Fascinating how they ran the market up. They broke up from the double bottom, and then it just stopped on a dime, and it stopped right on this next high here, 672. And so really, I suppose one could argue, this channel, in essence, we call this a narrow sideways channel. It's continuing until we get some sort of new fundamental driver. I have been reading in the boards that adoption seems to be moving along, and more people continue to be adding the Bitcoins to their business model. So, maybe somebody knows something, and there's a reason why price broke out there. The long and short of it here is this price pattern is still valid as long as these lows are not taken out. And so, price broke out through the top here, then as spent, basically this is a 4-hour bar. So 1, 2, 3, 4, 5, 6, 7, 8, 9 4-hour bars. So that's like what? That's like 36 hours. Just slowly consolidating in this trading range. So for those short-term traders, I can justify that long there. Personally, I think I would prefer to see this 672 level taken out. The fact that the market traded to it twice and couldn't break it, to me, is a bit suspicious. But having said that, if you did go long off of this 664.50 breakout, your stops there at 637.01, you're still in the trade, and this actually looks like a bit of railroad tracks here, so we might actually be turning here. Who knows? Tough to say. The point here is that if double bottoms are in your trading plan, then you got to take it, right? I mean, that's what trading plans are all about. Me personally, still on the sidelines. I'm not really overly convinced that we have done any real technical damage either to the upside or the downside here. If I take a look at the momentum and volume indicators, clearly we had a breakdown here off of this big run up. Let's get rid of this line. And that's in the process of cleaning itself up. You can see that we are starting to make higher highs and higher lows. So we'll see how this goes. Obviously, if we break down through this big red candle bar low here, then the OBV will be back in the bear camp. Momentum-wise, we talked a little bit yesterday, first thing in the morning, about how we have a new double bottom in the raw momentum indicator reading. And that's continuing to play itself out. I don't see any major shift here. However, I also commented yesterday when I looked at my overbought, oversold reading that I really didn't like the idea of putting on a trade when the overbought, oversold reading was right in the neutral territory here in this red box. And gee whiz, look at what we've got happening here. This breakout to the upside was a bit of a head fake, and now we're rolling over and coming back down. So now our Williams percentage R, our overbought, oversold reading is now starting. The raw reading itself got down into the oversold reading, and the moving average is starting to work its way down. Me personally, I would actually like to see this get into this oversold camp before I get a next big juicy buy signal, hopefully, out of that. So we'll see how that goes. But long and short of all this is the consolidation continues. I really don't see any big change here. Yes, aggressive double bottom hunters have a long working here with their stops just below here, and that trade is still working, but my hunch basically is we're kind of going sideways right at the moment. All right, so that'll be the summary for today. Just wanted to do a quick one, and hopefully that helps you understand the current context of the Bitcoin market. If you have any questions, feel free to get a hold of me, the_rational_investor at yahoo.com. You can go to my website, therationalinvestor.ca. You can look at all my different tutorial videos on the YouTube page, this YouTube channel, CR Investor. You can follow me on Twitter at CR Investor. And of course, you can always find me on TradingView. And these charts that you see here on today's presentation, they are the TradingView platform. And if you are looking for good, clean charts to work with, I like these guys. They're not bad. All right, so you guys all have a great day and good luck in your trades, and we'll talk to you tomorrow. Bye for now.